Hello and welcome to Ask for a Trend. I'm Josh Lipton, and for the next half hour, we're breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. And here are some of the trends we're going to be diving into. Stocks posting modest gains, the NASDAQ leading the way, boosted by strong performances in tech stocks like Nvidia, the S&P 500, and the Dow Jones, all advanced thanks to positive economic data. All major indices ended the day up on Wall Street. And we're finding out what direction auto stocks are heading in the wake of tariff turmoil. Ford had positive news to report. I'm going to look at what that all means. And in drone mobility, we're taking a look at whether investors should have sky-high expectations on modern aero defense technology. Well, automakers led by Ford saw big sales gains in May as price cuts and shedding inventories blunted the effect of President Trump's auto tariffs. For more on the latest numbers and the state of the auto industry, let's welcome in here Kevin Roberts, CarGurus Director of Economic and Market Intelligence. Kevin, always good to see you. So auto sales for May, Kevin, just looking, nice sales gains. I'm looking at Ford. Sales jumped about 16%, Kevin. Truck sales strong, hybrid strong, EV not great. Toyota looks like an increase of about 7% in May. We heard from Hyundai and Kia as well. Just broadly, when you looked over that data, Kevin, how would you characterize it? What did you make of it?
Yeah, it was, I would say, a return to normal. So I like to say the end of March, early April was kind of a crazy time for the auto industry when the tariffs were first announced. May was a little bit more back to normal, traditionally a really strong kind of sales month for the industry. End of tax season, we have late Memorial Day sales. So that's been really kind of helpful for the industry. And you mentioned it, several automakers really had some strong months. Couple things I think really kind of helped there. Ford had their employee pricing for all. Vehicle affordability has been a trend we've really been highlighting for a while now. So I think that kind of discounts really kind of helped drive sales there. And then you mentioned hybrids. That's one that helped for both Ford and Toyota. Hybrid sales continue to see really strong growth. Consumers really like hybrids, and Ford and particularly Toyota are really dominant in hybrid powertrains, which is helping to drive sales.
Do you think we saw some pull forward in those numbers too, though, Kevin? Folks trying to get ahead of tariffs?
That is the million-dollar question for the auto industry right now. How much, if we did see pull ahead, how much did we see pull ahead, and where might that start to bite back? Was that kind of Q2 sales towards the end of the quarter that we pulled that from, or was it later in the year? It's really an unknown at this point. Did we just kind of shake people off the sidelines who, weren't in the market, or did we kind of pull ahead a lot of volume in those kind of crazy weeks after the tariffs were announced? And it's a major unknown for the industry right now.
Kevin, tariffs in place. So do you think these automakers, do they maintain pricing, Kevin, or would you expect no? Starting here in June, perhaps, we're going to see prices start rising?
Yeah, so we've been monitoring what's been happening to average list price of vehicles on the site. Somewhat surprised that we haven't seen large shifts to this point. However, like you said, a lot of automakers, I think, were kind of in a wait-and-see approach after the tariffs were announced. And we're starting to see a trickle of some announcements of price increases as we get into June. And that's going to be a trend we kind of monitor to see if that continues and if we start to see some of that expected price inflation for vehicles as we move into the second half of the year.
What did you make of the reaction in some names this week, Kevin? Ford, GM, for example, moving lower as Trump talked tough on steel tariffs.
Yeah, so it's a little bit of a different situation than if we would have talked a month or two ago. We had another executive order signed towards the end of April, which gave hierarchy to stop stacking of a number of tariffs. And so that should stop Section 232 auto tariffs from being stacked with those steel and aluminum tariffs. So there is some protection for the auto industry. Now, it's important to keep in mind that that kind of protection only exists for finished vehicles and parts covered in those tariffs specifically. So for parts not covered there, we could see an impact there. And I think that's what that kind of risk is where you're seeing that shift this week.
And by the way, I just see a breaking news headline here. According to the White House, UK steel tariffs, they're going to remain at 25% for now. Lastly, Kevin, on Tesla, I want your views there. There, we did get some numbers this week. Broadly, weak sales for Tesla in Europe. What do you make of that, Kevin? Is that branding? Is that, the Model Y changeover? Is that more competition for Musk over there? Is it all three?
So we Tesla is a direct-to-consumer automaker, so we don't get their data in our listing data, so a little bit difficult to say there. What I can say from the used side of the market, even with all the noise around Tesla recently, still seems pretty strong demand for used Teslas out in the marketplace. So can't comment as much on the new side of the market, but used side still sees strong interest for used Teslas.
Interesting. Kevin, always great to have you on the show. Thanks so much for your time.
My pleasure.
Stick around. Much more Ask for a Trend. That's still to come. There is a shift on the horizon in modern warfare. Ukraine recently dealing a blow to several Russian air bases with the use of drone attacks. As of February 2025, tactical unmanned aerial vehicles account for 60 to 70% of damaged and destroyed Russian systems. That's according to the Royal United Services Institute. For more on the changes to modern warfare and ripple effects for the defense sector, we have Gabelli Funds portfolio manager Tony Bancroft. Tony, it is always good to see you. And the reason, of course, Tony, you are the perfect guest for this segment is not only are you a well-known analyst, you are in fact Lieutenant Colonel Tony Bancroft, United States Marine Corps. So we are lucky to have you. And I want to start, Tony, with those reports we saw. Ukraine's really unprecedented drone operation striking deep inside Russian territory. When you saw that, Tony, when you saw those reports, what was your reaction?
Thanks, Josh. Always great to be back. And, I think, Ukraine one-upped Israel on next level, next generation warfare. And, the U.S. Department of Defense has taken notes, and this is how things are going to be going forward. You're going to see a lot of asymmetric warfare, obviously a lot of use of drones and artificial intelligence and cyber attacks. You name it, however you can imagine it is going to be how it's going to be done. And, that was just sort of a case in point, the fact that, 117, how many ever $1,000 drones took out a third of the second or third largest Air Force's strategic bomber capability is legitimate. So you're going to see drones, be a lot of DoD and European spending going forward. I think right now it's about $15 billion in the U.S. DoD budget, and it's probably going to go to $25 billion. It's expected about by 2030, and doubling that almost in 2035. So I think we like the industry, we like the companies that are going to supply parts to them, and we're definitely bullish on it.
What are some of those companies, Tony?
Yeah, we sort of like the parts maker. I mean, I know there's a lot of drone suppliers out there, but companies like Textron and Honeywell and L3Harris, Ducommun, all sort of make these parts that go into all these these systems. They're obviously they're pretty intricate, high technology systems that need certain structures and certain electronics in them, and we sort of like those guys. And they're diversified as well because they're on multiple programs and they're also on the commercial side. And they're good cash flow businesses with long secular tailwinds.
I have to ask you a broader question, maybe as you talk about how you think maybe the future battlefield changes, and yes, it'll still involve tanks and fighter jets and battleships, more increasingly relying on AI and autonomous systems. Is the U.S. well prepared for that shift, Tony, in your opinion?
I think they are. I think the U.S. is actually. I think sometimes, the narrative is that the U.S. is fighting the last battle, and it's somewhat true, and that's somewhat true always when you talk about, warfare. I'm sure all the way back to Sun Tzu and you name it. But the U.S. is pretty capable, and the weapon systems we have are lethal. And we're still by far the largest drone builder in the world. I mean, there's as far for military drones, the U.S. is the most dominant, always have been, and I think we will continue to be. And we'll pair that with with our manned systems that are able to control it. A lot of this is going to come down to as we go further into it. Who is going to be able to essentially out-hack who, or who is going to be able to out-jam who. And at some point, you're probably going to need, you are going to need some type of manned system that can be closest, the node they would call it, to be closest to the autonomous systems or things that are capable of being jammed. And you're going to need the systems that the U.S. has, like the F-35, along with our the collaborative combat aircraft and other systems. There's a lot that we have, and our long-range fires are by far dominant, when it comes to being able to reach out and touch somebody.
I was going to ask you that, Tony, because I was curious, because I know you used to fly that FA-18 Hornet, I think. I was curious whether you thought, looking ahead in the future, would there still be fighter pilots, or do you think it would be purely autonomous?
Yeah, I'm sort of in the camp of, I think, what they said, what Tom Cruise said in Top Gun 2 Maverick, that, I know we are dinosaurs, but not yet. There's going to be a transition period, just like how, I've sort of said how natural gas is a transition fuel to, sort of whatever is going to be the more sustainable long-term, solar, you name it. But in the meantime, you're going to need manned aircraft, and with things that are carrying, troops and any kind of personnel, there's probably going to be a longer term tail for having manned aviation. But for what they're doing in Ukraine right now, I mean, you can just see it, and there's going to be a lot of autonomy, sort of essentially things that can't be, that can operate in a GPS denied environment. You're going to need navigation systems, INS systems, using magnetic the magnetic field of the Earth, using that as forms of navigation. There's companies that can do that, and you're going to see a lot more of that as things get jammed more. I mean, essentially right now, there's videos of these fields, these battlefields in Ukraine that are just lined with fiber optic, the size of fishing line, if not thinner, and these are all from weapon systems and drones so they just can't get jammed. They're being controlled by an actual cable, sort of like how a tow missile operates. And the whole battlefield is lined with it because there's so many attacks on either side of doing this just because of jamming. So you're going to see a lot of different ways to skin the cat, so to speak.
Tony, you are the perfect guy to, of course, talk about all of this. Thank you for your time today. Appreciate it.
Thanks, Josh.
When investors quickly flipping the script on sentiment, we're taking a closer look with today's chart of the day. Yahoo Finance's Julie Hyman joins us now with more. Julie.
Whiplash is what you and I might call it, but Michael Kantrowitz of Piper Sandler calls it narrative volatility. He and his team have been looking at what they say are really abrupt and dramatic shifts in sentiment over time. They're doing this by measuring AAII bearish sentiment, the American Association of Individual Investors. In other words, it's a measure of newsletters and where that sentiment is blowing. So what this chart looks at is the weekly sentiment indicators that come out in the sort of blue background here, and then the standard deviation from those newsletter writers on a weekly basis, and that's a 4-year rolling window. So basically, this is a way of measuring, again, what Kantrowitz calls that narrative volatility. We've looked at other times when we've seen big changes in the narrative quickly, the great moderation here in the early 90s, the tech bubble popping, when you saw low narrative volatility, then back up and down again during COVID. But now, according to this measure at least, they say we're at the highest narrative volatility ever. In other words, tariffs on, tariffs off. Things are good, things are bad. The economic outlook is strong. No, it's not. And as to what to do about it, well, we talked to Kantrowitz earlier on about that. This is what he said.
The lighter line of bearish sentiment is extremely volatile. And catching the wave, good luck. Anyone who could catch that wave, more likely to be hit by the wave than catching it. So it's not really realistic to catch these short-term risk-on, risk-off swings in the market, and we think they will persist.
So this is the norm for now, the back and forth. He talked about what has been his consistent strategy, which is to get into what he calls quality stocks here, stocks with strong balance sheets, good cash flow. So we'll see if that strategy continues and also if that narrative volatility sticks around, Josh.
All right. Thank you, Julie. Well, tariff uncertainty, price sensitivity, and a heightened focus on value, that's driving consumers' decisions when it comes to grocery shopping. One key area bearing the brunt of these changes, snacking. For more, let's welcome in Yahoo Finance's Brooke DePalma.
Good afternoon to you, Josh. Certainly snacking feeling the brunt as consumers really become more choiceful, more decision-oriented when they hit the food store. And what we're hearing from Nielsen data is that the impact of inflation and higher costs, as well as the uncertainty around tariffs, is changing how consumers think about snacking. So they're buying less often. They're looking for deals when they do more often. They're also reducing that impulse purchase. They're not, jumping to make that or grab that extra snack at the checkout line. They're also buying fewer premium or indulgent options, perhaps those higher cost options. And lastly, they're switching to more private label, which tend to be lower costs. And this data, this consumer behavior, this shift is then impacting earnings. That's what we're hearing so far from companies. So Campbell's, for example, recently saw a decline in their volume mix per their recent quarter. They also saw a decrease in revenue. And the Campbell's CEO addressing this on a call with investors this week, saying, quote, consumers continue to cook at home and focus their spending on products that help them stretch their food budgets. And they're increasingly intentional about their discretionary snack purchases. Now, Campbell's is not alone in this. We also heard from a slew of other companies. We heard from PepsiCo, we heard from Kraft Heinz, we heard from Kellanova. They also saw a decrease in terms of volume, just how much consumers are buying when it comes to snacking. And this is why holidays, think 4th of July, think good weather is really crucial. These companies want to make sure they have the right price point in front of consumers. So they're not saying, hey, maybe I don't need those Tostitos or there's Lay's, but instead they're turning to them. And when we think about it, a bad weather Memorial Day likely turned into poor sales for these companies as well.
Now, sticking with snacks, I know you were also writing today about McDonald's and the snack wrap. What's going on there? What's going on?
It's back, Josh, on July 10th. McDonald's is bringing back their coveted snack wrap, a fan favorite. Believe it or not, it's been since 2016 since the snack wrap has been off the menu. Now, this will be a permanent menu item starting on July 10th, and you can either get it by itself or part of that coveted combo meal. But keep in mind, this reintroduction of the snack wrap comes at a time when McDonald's U.S. same-store sales are doing poorly. We saw in this past quarter, they had another decline. That's on top of a decline in the fourth quarter. Back in Q4 2024, we saw 1.4%. That accelerated in the first quarter of 2025. Is they're really looking to get over that value misperception, perhaps, among consumers. But of course, they also had that E. coli outbreak back in October that certainly stalled any sort of momentum that they were gaining back with consumers.
Now, see, when I hit McDonald's with the 6-year-old, it's all about the McFlurry. With the
All about
Oreo
the
cookies,
McFlurry.
oh, I can crush that. But I'll check out the snack wrap.
Did you try the new chicken options? That's why
No,
this
but
is all
should I?
happening now.
It's all coming together.
It's all coming
It sounds
together.
delicious.
It does.
All right, that is a wrap on today's Ask First Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market moving stories affecting your wallet. Have a great night.